Hi, this is Shireesha from Master of Business Administration, Institute of Aeronautical Engineering. So today's topic is profit and loss account. So coming to profit and loss account, after preparing trading account, we are going to prepare profit and loss account in the final accounts. After preparing trading account and profit and loss account, we have to prepare balance sheet, which is a financial statement. So let us understand about profit and loss account and what are the things which we are going to ascertain in profit and loss account. So coming to profit and loss account, basically we do profit and loss account to ascertain profit or loss. So in trading account, we are going to ascertain gross profit or gross loss. But in case of profit and loss account, we are going to know or get what is the profit, net profit or the net loss of a particular organization. So this profit and loss account, in profit and loss account, we are going to write indirect expenses and all the direct expenses will be written in the trading account. So this profit and loss account is getting initiated by entering gross profit or the gross loss. If we get gross profit in case of in trading account, that gross profit carried down balance will be taken into the credit side of profit and loss account and we start doing the profit and loss account. If we are getting gross loss in trading account, that carried down balance we are going to get brought down to the profit and loss account at debit side, and then we start entering all the indirect or general administrative, advertising and sales expenditure and the incomes in the profit and loss account. So now in any of the businesses, we are going to prepare final accounts first by doing trading account, then profit and loss account and balance sheet, which is the financial statement. After doing balance sheet, any business has to publicize their balance sheets to their stakeholders. So now coming to the pro forma of the balance sheet now coming to the profit and loss account pro forma. So it is also a T-shaped account where debit side we are going to write all the particulars which are going to have the expenses and all the incomes we are going to write on the credit side. So now coming to debit side, the first entry of the profit and loss account is gross loss in the debit side, which is transferred or received from the trading account. If we get the gross loss, that gross loss has to be brought down to the P&L account, that is profit and loss account, debit side. And if we get gross profit in trading account, that gross profit, whatever carried down balance is got in the trading account, that has to be brought down to the credit side of profit and loss account. As it is a profit, we are going to write in the credit side. So basically in this profit and loss account, we are going to record all the nominal account items. So the rule of nominal account item is debit all expenses and losses and credit all incomes and gains. So whatever recurring expenses or the recurring incomes, whatever we get during the business activity, all those will be recorded in the profit and loss account. In general, we are going to discuss what are the different types of expenses of the business in the daily routine of the business. We are going to discuss in the profit and loss account debit side. Now the second item, the first item in the debit side of profit and loss account is gross loss, and the second item, like the main header for this, is office expenses. Office expenses, whatever which are related to office, will be recorded in profit and loss account, and whatever the expenditure or the income which is related to manufacturing or the factory will be recorded in trading account. Now coming to office expenses, So salary is a expenditure which is paid to the employee of a particular organization. So it is expenditure, so we record in the debit side of P&L account. Rent of the office, so rent also expenditure, so we record in the debit side of the P&L account. Electricity for the office, we are going to record in the debit side. It is also expenditure. Postage and telegraphs, so it is also expenditure, so we are going to record in the debit side. Legal charges, if we have any legal activity to be performed, so that legal charges have to be written in the debit side, because it is also expenditure for the business. So we are going to write in the debit side. And now insurance premium. So if we are insuring the office furniture or the factory, whatever it may be, the insurance, whatever premium we are going to pay for the insurance of a particular product, that is also expenditure. So we are going to write it is a regular expenditure. Whatever regular expenditure which is incurred by the organization, that has to be recorded in the debit side of the P&L account. So insurance premium we regularly pay, so it is a regular expenditure, so we have to write in the debit side. And audit fees, so auditing of all the accounts or auditing any of the activity is also expenditure, so audit fees also comes under debit side. Now the other overhead is selling and distribution expenses. So to advertisement, that is advertisement is to make the advertisement, so we have to spend some amount of money for the business, so it is expenditure, so we are going to write in the debit side. And salary to salesmen, so TADA or traveling allowance, all these also expenditure, so we are going to record in the debit side. Go down rent is also expenditure. Carriage outwards is also expenditure, so we are going to write in the debit side. So carriage inward and outward both are given. So carriage inward we have to record in the trading account. Carriage outward we have to record in the profit and loss account. Only if carriage, the word carriage is given in the final accounts or in the trial balance, then we have to record carriage only in trading account if the word carriage is given to us. So these are the selling and distribution expenses, and the next one is financial expenses. So financial expenses are interest paid. So if we are paying interest for the amount of loan we have taken, so interest is an expenditure for us. So we have to record in the debit side, and we have to record the amount here. And discount given. If we are offering any discounts or we are allowing discounts to our customers, that is loss for us. So that discount allowed or the discount given will be recorded in the debit side of the P&L account. After recording all such expenses or the nominal losses, like discount allowed, all these things, we are going to the credit side of the balance of the P&L account. So the first item in the credit side is gross profit, which we have carried down from the trading account. And the other revenues are, if we have given any building or if we have owned a building and we have given that building for rent, so we are going to receive rent very frequently. So that is the income which is generating very frequently. So in a regular basis, so we are going to record as it is an income. So credit all incomes and gains. So we are going to record in the credit side of the profit and loss account. And next one is by interest received. So we may give loans, we may offer loans to others, and for that we may receive some interest of amount. So that is also income. So regular income. So we are going to record on the credit side of profit and loss account. And by discount received, as we offer discounts to our customers, it is loss, and we also get discounts from our vendors. So then that discount received is a gain for us. So it is a credit side item according to nominal rule. So next one is commission received. We are going to receive commission. So that is also income for the company, so it is also have to be recorded in the credit side. Next, by dividend received. Dividend means we are on the amount of shares we have bought for that every year or every half yearly, quarterly, the company is going to give a dividend on the shares which we hold. So that is also income for us. So that is the reason this dividend received is income. So we are going to record in the credit side. And any other miscellaneous income which is earned by the company can also be recorded in the credit side of profit and loss account. After recording all the incomes and gains on the credit side of the profit and loss account, and after recording all the expenses and losses on the debit side of profit and loss account, one have to balance both the sides. So total of a debit side and total of credit side has to be checked, and after checking if any amount is to balance both the sides, if any amount is less on the debit side, that we call it as gross profit. If any amount is less on the credit side, then we call it as a gross loss. So that gross profit, if we get the gross profit, that gross profit have to be added to the capital in the balance sheet liability side. And if we get the gross loss, that gross loss has to be deducted from the capital in the balance sheet liability side. So next, we are going to move forward with a small problem, how to record the items in the trading and profit and loss account. Of course, the basic trading account is like the opening stock purchases in the debit side, and sales and closing stock on the credit side. Once we get the total balances here on the debit side, we are fall or short of 4,500 to make both the balances of debit and credit in trading account. So we are going to get gross profit of 4,500. So the total is 11,500 debit side and 11,500 credit side. Once we get this gross profit from the trading account, this gross profit is the carried down balance. This carried down gross profit balance has to be brought to the profit and loss account credit side. Here, if we get carried down balance debit side, that has to be transferred to the credit side of profit and loss account, so that we can initiate the profit and loss account. So by gross profit brought down 4,500, which is the carried down balance of the trading account. So after entering this, see, next one is coming to debit side of profit and loss account to printing and stationery. Printing and stationery is related to profit and loss account. It is indirect expenditure. So we are going to record in the debit side. Electricity is also indirect expenditure, so we are going to record in the debit side. To selling and distribution, so it is also coming under the overhead of selling and distribution, and this is also indirect expenditure, so we are going to record on the debit side of profit and loss account. Any other miscellaneous expenses also we are going to record on the debit side. After that, interest income. So we have received interest, so that is a gain for interest received. It is an income for us, so we are going to record on the credit side of the profit and loss account. Once all the items are recorded in debit side and credit side, then we have to balance both the sides. So the total of debit side and credit side has to be same. So the total of credit side is 4,600. And the total of debit side before entering the net profit is 200 plus 300, 500 plus 500, 1,250. So 4,600 minus this 1,250 will get to 3,350. So this 3,350 is the amount which is short here on the debit side, that we call it as gross profit. So the gross profit is 3,350. Now the total of debit side is 4,600 and total of credit side is also 4,600. This gross profit, we have earned gross profit by doing a P&L account. So this gross profit has to be added to the capital, in balance sheet. So this is how we have to create a profit and loss account. Now going on with a small problem so that we could easily understand how to do the profit and loss account. So prepare trading and profit and loss account and a balance sheet of Miss Shine Limited from the following particulars. So account title and amount is given. Sundry debtors 1 lakh, bad debts 3,000, trade expenses 2,500, printing and stationery 5,000. So like this we have got so many items to be recorded in trading account and profit and loss account. Now one by one we have to check the items and record into the respective accounts or the balance sheet. So now we are going to prepare trading and profit and loss account by checking all these items. Now coming to trading and profit and loss account. So first heading we have to write as trading and profit and loss account for the year ended so and so year of Miss Shine Limited. So now coming to sundry debtors. Sundry debtor is a current asset. So we are not going to record either in trading account or profit and loss account. Now bad debts. Bad debts is a loss for us. So we are going to write this bad debts is a indirect loss. So we are going to write in the debit side of profit and loss account. So here I'm going to write it as 2 bad debts. So 2 bad debts, the amount is 3,000. Next, this is trading, printing and trade expenses. Next one is trade expenses. Trade expenses is, see, once we get the trade expenses, we have to search for another expenses which is general expenses. If trade expenses is given and general expenses also given in the problem, then we have to record trade expenses in the trading account and general expenses in the profit and loss account. If there is no general expenses in the question or in the problem, then we can record this trade expenses in profit and loss account. So we are going to write it in 2 trade expenses. 2,500. Next one is printing and stationery. It is indirect expenditure, so we have to record in the profit and loss account. Next one, rent, rates and taxes. It is also indirect expenses. To rent, rates and taxes. $3,450. Next, freight charges, which is related to trading account. So we are going to write in the trading account. $2,250. Sales returns is a trading account item, so we have to deduct from sales. So first we have to write by sales. The amount is not known right now. So now first we'll write sales returns. So sales returns is 6,000. Next, motor car. Motor car is a asset. It is not an expenditure. It is a asset. So we should not write in either trading or profit and loss account. This is a fixed asset. Now opening stock, which we have to record in the trading account, the first item of the trading account debit side to opening stock. $75,550. Stationery, all these are done. Now furniture and fixtures. Furniture and fixtures are also comes under fixed assets in balance sheet. So we are not going to write. And next one is purchases, 75,000. So we have to record in the debit side, purchases. $75,000. We shall write in the inner column. 75,000. Next, drawings. Drawings, it is supposed to be written in balance sheet that has to be reduced from the capital, so we are not going to record here. Investments is also asset, so we are not going to record. Cash in hand is also a balance sheet asset, current asset, we are not going to write. Cash at bank is also current asset, we are not going to write. Now coming to bills payable. Bills payable is a liability, current liability, we are not going to write. Sundry creditors is also current liability, we should not write. Provision for bad debts. It is a loss for us, so we have to write in the debit side. Provision for bad debts. The amount is 1,500. And now this is done. Carriage outward. Carriage outward means purchase returns. So this we have to reduce from the purchases. Less purchase returns or return outward. $4,500. So the net purchases will be 70,500. Next, capital, which is the liability. So it is also liability. So we have to record in the balance sheet. Now discount received. Discount received means it is a gain for us. So we are going to write on the credit side of P&L account by discount. Received 3,500. Next, interest received. It is also income. So by interest received 11,260. Next, sales. We have to record in the trading account credit side 1 lakh. So from 1 lakh we have to remove 6,000, that is 94,000. Now, after recording all the items in the problem, we have to see what is the closing stock. So closing stock is an adjustment all the time, and this closing stock will be evaluated after preparing the trial balance. So that is the reason it is considered to be an adjustment. Any adjustment we get after preparing the trial balance has to be recorded in final account twice. So once in either trading or profit and loss account and the another time in the balance sheet. So now coming to closing stock, this closing stock have to be recorded in credit side of trading account once, and second time we are going to record in the balance sheet asset side. Anyhow, we are preparing only trading and profit and loss account now, so we are going to record this closing stock in trading account credit side. So buy closing stock 1 lakh. Now after entering all the items in debit side and credit side of the respective trading and profit and loss accounts, we have to balance both the sides. First, after entering the items, first we have to ascertain what is the gross profit or the gross loss which we have incurred by doing trading account. So the total of debits, the total of credit side is 1,94,000 and the total of debit side is 70 plus 75,000, that is 1,45,000 plus 2, 1,45,000, 46, 47, 1,47,000, 1,47,000, 1,48,000, 1,48,300. So 1,94,000 minus 1,44,300 has to be reduced. So this is 1,48,300. So now we have to reduce this from 1,94,000. So 55,700 is the gross profit. So to gross profit 55,700 and the total of debit side is also 1,94,000. And this gross profit is the first item of profit and loss account. Here we close down the trading account. Now this is the profit and loss account. By gross profit we have to brought down from trading account. So that is 55,700. So now the total of credit and debit side of P&L account has to be evaluated. So 55,700 plus 11,260 plus 3,500. So the total of debit side is 70,460. Sorry. The total of credit side of profit and loss account is 70,460. Now we shall take the total of debit side 3,000 plus 2,500, 5,500 plus 5,000, 10,500, 10,500, 11,000, 12,000, 12,300, 12,000, 13, 14, 15,000, 15,450. So the balancing figure would be 55,010 to net profit 55,010, and now total of debit is 70,460. So this is net profit. This net profit has to be added to the balance sheet in the liability side for the capital. So like this, we have to create trading and profit and loss account, and this net profit and gross profit is ascertained by doing trading and profit and loss account. Now going on with the difference between trading and profit and loss account, the major differences in the final account of trading and profit and loss account is, in final accounts, first we prepare trading account this is the first stage of final accounts, and profit and loss account is the second account in the final accounts. And here in trading account, we ascertain gross profit and or gross loss in by doing trading account, and we get the net profit or the net losses in profit and loss account. And in trading account, we are going to record all the direct expenses, and only which are trade related or factory related expenditure or income will be recorded in the trading account. See, in the profit and loss account, we are going to record all the indirect expenses or the general and administrative expenses or the incomes in the profit and loss account. So this is not the first way of doing. By doing trading account, we cannot just make the balance sheet. After ascertaining the net profit, then only we can able to do the balance sheet. So we have to prepare trading account, we require trial balance, but to prepare profit and loss account, we require gross profit or gross loss. So once we get the gross profit or gross loss, that has to be transferred to profit and loss account, and then after we get the gross profit, net profit or the net loss, we are going to transfer it to the capital in the balance sheet. So these are the major differences of trading and profit and loss account. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.